Initial public offerings are often marketed as golden opportunities for investors to make quick profits. However, history has shown that not all IPOs are designed to benefit retail investors. Many of them are nothing more than carefully orchestrated traps, where insiders and promoters make billions while the general public bears the loss. In this article, we will uncover some of the biggest IPO scams in India, including Paytm and Reliance Power, and reveal how retail investors were deceived. The Paytm IPO was one of the most hyped public offerings in Indian history. The company raised a staggering 18,300 crore rupees, making it the biggest IPO India had ever seen. However, from the very first day of trading, the stock turned into a nightmare for investors. It opened at 2,150 and plunged nearly 27% on the first day itself, wiping out thousands of crores in investor wealth. The real winners of this IPO were not the retail investors, but the institutional investors and promoters who had already made their money before the stock even hit the market. Paytm was a loss-making company at the time of its IPO, yet it was priced at a sky-high valuation, luring small investors into a bubble that burst almost instantly. This IPO serves as a classic example of how excessive hype, overvaluation, and insider profit-taking can result in massive losses for retail investors. Back in 2008, Reliance Power launched what was then India's most anticipated IPO. Investors rushed to buy shares, expecting massive returns from one of the country's most influential business groups. However, within weeks of its listing, the stock crashed, leading to one of the biggest wealth destruction events in Indian stock market history. The scam behind this IPO was simple. Promoters overvalued the company, created artificial demand, and then dumped their shares at high prices before the stock collapsed. Retail investors who believed in the Reliance brand were left holding worthless shares, while insiders walked away with huge profits. The case of Reliance Power stands as a harsh reminder that even big names cannot guarantee success in the stock market. IPOs are often presented as once-in-a-lifetime investment opportunities, but in reality, they can be highly manipulated. Promoters and investment banks create fake hype by flooding the media with positive news, leading to artificial demand for shares. When the stock finally gets listed at an inflated price, insiders and institutional investors quietly exit their positions, leaving retail investors to suffer losses. One of the biggest red flags to watch out for is when a company's insiders start selling their shares before or soon after an IPO. This is a clear indication that even those running the company do not have faith in its long-term success. Similarly, when a company is heavily loss-making but still priced at an astronomical valuation, it is likely that the stock is being overhyped for a short-term gain rather than real business growth. To safeguard yourself from falling victim to IPO scams, always check a company's fundamentals before investing. Look at its profitability, debt levels, and insider transactions. If insiders are selling before an IPO, it is a clear warning sign. Avoid investing in companies that are overvalued or have no clear path to profitability. Another key strategy is to wait before jumping into a newly listed stock. Many IPOs witness a huge sell-off within the first few weeks, allowing patient investors to buy at a much lower price than the IPO listing rate. Instead of blindly chasing IPOs, consider investing in companies with a proven track record of profits and growth. IPOs can be great investment opportunities, but they can also be dangerous traps. The cases of Paytm, Reliance Power, and many others have shown that not every IPO is designed to benefit investors. Promoters and insiders often take advantage of market hype to dump overpriced shares, leaving retail investors with huge losses. The next time you see an overhyped IPO, ask yourself, is this a genuine investment opportunity, or am I just being lured into another retail investor trap? Always do your research, stay cautious, and remember that in the stock market, hype never guarantees success. Fundamentals do.